Hey everyone, it's Julie here with Tip Ranks. Today we're taking a look at 3 unanimous strong buy uranium stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Recently, I've had a couple people ask for a video on nuclear stocks. So today we're diving into uranium companies as uranium is the primary fuel for nuclear reactors. Skyrocketing demand from AI data centers and global decarbonization is fueling nuclear energy's comeback. With uranium supply being squeezed by mine shortages and geopolitical tensions, prices are climbing. They're forecasted to hit $140 by 2027. So today we're taking a look at 3 companies that are focused on uranium. We're going to see what it is that they do and what Wall Street analysts are predicting for the stock's future. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's dive right into today's stocks. We're going to kick things off today with a company called Uranium Energy. They trade under the ticker UEC, currently priced at $6.50. Overall in the past year, they're up 8.6%, but have climbed 20% in the last 3 months. Uranium Energy is a U.S.-based uranium mining and exploration company with a focus on in-situ recovery methods. Those ISR methods extract uranium with minimal environmental impact. They operate North America's newest uranium mine, the Burke Hollow ISR project in South Texas, and hold a portfolio of advanced stage projects, including the Rough Rider project in Canada's Athabasca Basin. They also maintain one of the largest physical uranium inventories in North America, positioning them to capitalize on rising uranium prices. UEC just shared their third quarter earnings report at the start of June, and they did have a slightly wider than anticipated loss per share, coming in at a 7-cent loss per share, which was 1 cent wider than analysts were anticipating. On the positive side, the company did come out with $271 million of cash inventory and equities and no debt as of May 30th, 2025. Management did say that with the U.S. now targeting a 4-fold expansion of nuclear capacity and rebuilding its nuclear industrial base under presidential executive orders, their production ramp-up is strategically aligned with the expected increase in uranium demand. Following that quarterly report, we did have an analyst at BMO Capital initiate coverage with a buy, noting that the company is a uranium producer and developer with a North American-focused portfolio of assets that is poised to become a key provider of U.S. domestic production. The firm says the stage development of Uranium Energy's low capital intensity hub-and-spoke model and strong balance sheet provide production and funding flexibility while offering attractive near-term production growth. And with 5 current analyst ratings, it does come in as a unanimous strong buy. The average price target is $10.50, implying an upside potential of nearly 62%. Looking at those ratings down below, they range from an upside of 19.5% up to 88%. For our second stock today, we're looking at Energy Fuels. They trade under the ticker UUUU, currently priced at $5.42. They are down nearly 5% overall in this past year, but did gain 32% in the last 3 months. Energy Fuels is a leading U.S. critical minerals company with a primary focus on uranium mining, exploration, and sales. That is complemented by operations in vanadium, rare earth elements, and heavy mineral sands. They own the White Mesa Mill in Utah, the only fully licensed and operating conventional uranium mill in the U.S., capable of processing uranium ore and recycling uranium-bearing materials. Energy Fuels is also expanding into REE production, notably at its Donald project in Australia, aligning with clean energy and critical mineral demands. They shared their Q1 earnings report near the start of May, and they did have some mixed results, with a miss on earnings but a revenue beat. They did report a net loss of 13 cents per share, which was 8 cents wider than anticipated, and that was due to an aggressive project advancement program and electing not to sell uranium at current prices. They did have overall revenue of $16.9 million, which beat by $8.7 million, and reported a strong working capital position of $214 million, no debt, and excellent liquidity with over $210 million in cash and marketable securities. In April, they also achieved record uranium production. Energy Fuels does just have 3 current analysts weighing in, but they do all rate the stock a buy and are all rated 5 stars themselves. The average price target of $7.56 implies an upside potential of 39%. And looking at those price targets down below, they range from an upside of 6% all the way up to 84%. If you've made it all the way to our third stock today, then this is a reminder to make sure you've hit that thumbs up button. Last but not least, we're looking at Cameco. They trade under the ticker CCJ, currently priced at $68.25. Their stock has climbed 35% in this past year, and in the last 3 months has gained 56%. Cameco is headquartered in Canada and is the world's largest publicly traded uranium company operating across the nuclear fuel cycle. They produce uranium from high-grade mines like Cigar Lake and McArthur River in Canada's Athabasca Basin and in Inkai, Kazakhstan, which together account for about 20% of the global uranium supply. They also provide uranium refining, conversion, and fuel fabrication services for nuclear reactors worldwide. Their 49% ownership of Westinghouse Electric, which is a leader in nuclear reactor services, adds stable revenue beyond commodity cycles. Cameco also shared their first quarter earnings report near the start of May. They did fall slightly short on earnings, but had a revenue beat. Earnings per share came in at 12 cents, which did fall 1 cent short of expectations, while revenue grew 24% year over year to $789 million. They noted that the future picture for nuclear energy is more positive than ever and saw notable improvements in their Westinghouse's adjusted EBITDA by 19%, with a strong outlook for the whole year ahead. Just today, an analyst from RBC Capital increased their price target on the stock. They said the company looks uniquely well-positioned to benefit from accelerating growth in the nuclear industry and a tight uranium market. Westinghouse has a pole position within the nuclear industry with a ubiquitous nuclear services business, widely considered large reactor design in the AP1000, and a mutually beneficial partnership with Korean nuclear builders. And with 14 analyst ratings, Cameco does come in as a unanimous strong buy. The average price target comes in just shy of $75, implying an upside potential of 9.7%. And looking at those recent price targets, they range from an upside of just a couple of percent up to 14%. So that is a quick look at 3 uranium stocks, all rated unanimous strong buys from Wall Street. Let me know your thoughts on these 3 companies and what other stocks in this sector have been catching your eye lately. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always do your own research and due diligence. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.